Thank you for joining me. I'm Alex, and I want to talk about BJ's Wholesale Club today. And there's two reasons for that. Number one, they actually are up quite a bit during this whole crisis. And number two, their stock symbol is BJ, and I'm a child, so that's what we're doing. So they're a wholesale club, obviously, kind of like Costco, Sam's Club. Not quite on that scale, obviously, but basically doing the same thing. And the big thing with wholesale clubs is that you can deliver things at the full truckload to the stores and unload whole pallets. And so there aren't really too many scale factors that give like a Sam's Club or a Costco a huge advantage, because shipping at full truckload size is really fairly cheap. So as long as you're shipping in full truckloads, there's not really any scale that really improves the pricing on that. So they could be competing basically on the same level as a Costco or a Sam's Club. And if you have a club, if you open like at least 5 of them, you could probably compete on price as well. So current price is $26.20, which gives them a market cap of $3.6 billion. And they started the month with about $20, and they briefly went over $30. So quite a significant gain, pulled back a little. So it's really is interesting to watch a stock like this, or a Walmart, by the way, or a Costco. And people are really buying a lot more stuff than they used to, and never seen shelves so empty at Walmart. Dividend is zero. It's going to stay that way for a long enough time for me to not concern myself with it. Current revenue, $13.2 billion, slightly up. Earnings, $187 million, up significantly, which gives them PE of 19, forward PE of 15, which compared to Walmart, for example, Walmart, because they don't have a lot of one-time expenses last year, kind of got a little bit down, but still twice of what this stock has. Amazon, for example, in the 80s, so that should give you kind of a comparison there. Total assets, $5.3 billion, up significantly. Total liabilities, $5.3 billion, also up significantly, which gives them a total stockholders' equity of $54 million in the negative, which is kind of a problem for me, but that's going in the right direction, so... So overall, I would say that it's a fairly safe stock, because these kinds of companies obviously are going to be around, they're going to be needed, and they should make it through the crisis pretty much unscathed, because they tend to have more revenue rather than less, like many other businesses. So if you want a stock to just get you through the crisis, I would strongly recommend this one, or Walmart, or an Amazon, or a Costco. Probably not many retailers that don't have groceries, because obviously their revenues are kind of cratering right now. But overall, I would say that the balance sheet I really don't like. The forward P is decent. Earnings going in the right direction. Obviously, no one can predict the future, but you would think that things are going in the right direction, at least until the crisis is over. And obviously, dividend is nothing, so nothing to talk about there. So for a growth investor, this is definitely not the stock. For a dividend investor, this is definitely not the stock. And for a value investor, you're going to have to decide if you can deal with the balance sheet, because the balance sheet is awful. And I would say that the rest of the stats look pretty decent. But I do think that, especially during this time, there's many better opportunities out there. And so I really would not buy this stock. But I wouldn't really blame anyone for buying this, because the balance sheet, while it's terrible, it's going in the right direction. The earnings are going in the right direction. The revenue slightly increasing, but I would assume that because of the current situation, they're increasing a lot more. And so all of that put together means that this is probably a pretty decent stock to buy right now. And you will just have to decide whether or not you can deal with the balance sheet as it is. One caveat to that is that once this whole crisis is over, and people go back to normal, there might be a recession, which means that their revenue might actually go down significantly from there, because the wholesale clubs do supply a lot of restaurants and other small businesses. And if they go under, then this might also hurt the wholesale clubs. So after all of this blows over, you might have a problem with a recession and these stocks getting hit quite significantly. So if you wanted to have a stock that is similar to this one, then I would probably recommend a Walmart, because they're obviously going to be around and they're very safe. Obviously, you can't expect a Walmart to shoot up in price, so if that's what you're concerned about, Walmart is really not what you want. This stock definitely has potential to go up over the short term, and it definitely has potential to be around in 10 years. I don't like the balance sheet, and I don't think it's really safe enough for me to buy it, so I'm going to stay away. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.